what's at stake, in my view, is the very future of the financial system and sort of America's role in it.
Hi, I'm Jeremy Allaire, and welcome to The Money Movement. We're kicking off a new season here, and I'm very excited to welcome our guest, Heath Tarbert, Chief Legal Officer and Head of Corporate Affairs at Circle. Heath, welcome to the show.
Great to be here, Jeremy.
I wanted to have a setting that was really appropriate for you for this episode, so we kind of
Well,
wanted
you've outdone yourself. This is a marvelous place, and I'm a big fan, of course, of the money movement even before joining Circle. So I don't know what episode we're up to, but it's quite a bit.
I don't know what it is. It's sort of maybe in the 80s. But I'm really excited about this conversation for a whole bunch of different reasons. Obviously, we've had a chance to work together. And obviously was aware of your work well before you joined Circle as well. And actually, that's maybe a great place to kind of start the conversation, which is just for everyone who's tuning in, just a little bit about your journey, your journey through your career. You've had an amazing career, and kind of how you found yourself kind of going down the rabbit hole of this whole technology space, and your interest there, and just maybe we'll kind of set the stage with that.
Sure. I guess the common motif throughout my career has been sort of the intersection of law, finance, policy, and technology. So obviously went through undergrad, studied accounting and finance, on to law school, both here in the US and in the UK, came out and practiced corporate law for a few years. And then it became clear that I really wanted to do more policy and get sort of a DC type practice. So I was fortunate enough to clerk for the US Court of Appeals for the DC Circuit and then the US Supreme Court. And that left me, in my early 30s. And so I was like, well, what should I do next? So I decided to join what is perhaps one of the most prestigious and also lowest paying law firms in the world, which is the White House Counsel's Office. So it's about.
I didn't know that they weren't that good paying, but it's good to know.
It's government pay. It's about 15 lawyers, one client, the President of the United States, and I arrive in August of 2008. Well, they had looked at my bio and said, well, you'd have had a finance background, corporate law. We're going to give you the financial markets portfolio. Every associate counsel of the president sort of took a different piece of the government, whether it be Homeland Security, Health and Human Services, the Defense Department. So I took the financial markets portfolio. And famously, they said, but don't worry, Heath. It's at the end of an administration, the end of the Bush administration.
Right.
Nothing's likely to happen.
It's August 2008.
It is August 2008. So at that point, of course, a few days into it, Fannie and Freddie are put into conservatorship. Then Lehman fails. And essentially, I become the White House associate counsel on the financial crisis, full-time, 15 hours a day. And it was an exhilarating experience. But at that point, I sort of said to myself, well, this is where I want to spend the next couple of decades.
In financial crises.
At least in financial regulation, preventing future crises,
Yes.
Dealing with that. So I think that was sort of a watershed event for me personally and professionally. I went on to be special counsel on the Senate Banking Committee during the Dodd-Frank legislation. I then went into private practice, representing approximately 200 different clients, financial infrastructures, banks, non-bank institutions all over the world in applying financial regulation. And then in 2017, in the last administration, was nominated and confirmed to be Assistant Secretary of the Treasury for International Markets, and then subsequently the 14th chair of the CFTC, the Commodity Futures Trading Commission. And it was really in those last couple of jobs where I first, sort of really got into understanding digital assets, public blockchains, and really seeing their promise. So this has been an area where I have been fascinated for the last 5 years or so, and the opportunity to work for a firm like Circle was just so unparalleled that I couldn't pass it up.
Well, we are very grateful for that. It's an amazing journey, obviously, and I think that last vantage point in public service where you're you're looking at the very fundamental structure of the way the markets work, or the way the international financial system is structured. And I was living a parallel life at the time, and I remember going and presenting to the FSB, and I think you were representing the U.S. at the FSB around the same time. And this dialogue around stablecoins had started, and we had obviously been big believers in that for a very long time and what that could be. But it took a wake up call like Libra or a big tech saying we're going to do something, and it's called a stablecoin for everyone to kind of tune in. But now it really feels like the whole dialogue on this has evolved a lot. I mean, the understanding within the policymaking community is obviously very different. The situation's evolved a lot. We're going to talk a bunch about that in today's program as well. But I want to get back to, let's say you're sitting in the seat at U.S. Treasury, and you're looking at, in the international affairs dimension, and really you're kind of like, you represent the dollar around the world, right? You're out there dealing with governments, dealing with economies, dealing with the dollar. And, here we are today, and there's a lot of discussion about the role of the dollar in the world. Is the dollar in decline? There's, alternative payment systems. But I think, it's at the core, obviously, of what we do. And obviously, as part of your professional responsibilities now, you're thinking about this a lot. But maybe just stepping away, what's at stake here? What's at stake for the dollar? Why are digital dollars so important? And what does this country need to be thinking about right now?
Yeah. I mean, what's at stake, in my view, is the very future of the financial system and sort of America's role in it. It's interesting. People understand the dollar to be the world's reserve currency, but I think very few Americans actually understand and grasp the importance of that. So over the last 60 years, in fact, it was I think it was the French finance minister back in the 1960s or 70s that called it the quote-unquote exorbitant privilege,
right,
that the United States had a major privilege over every other country because the dollar is the world's reserve currency. So if you look back, funding, Social Security, our education system, our infrastructure, all of that benefits through lower interest rates, all things being equal, because the dollar is the world's reserve currency. It translates into American families as far as our household mortgages are lower. And it allows us to project power overseas, finance our military. So the dollar, and I would say the other thing it does is because it is the world's #1 medium of exchange, it makes it easier to buy and sell American goods. So so why is that interesting? It's interesting because the dollar plays a much bigger role vis-a-vis the world economy and transaction than the United States' GDP vis-a-vis the GDP of the rest of the world. So the dollar plays this outside role. And it's critical from my vantage point, both as a private citizen, but certainly when I was in government, that we want to continue to keep playing that role. So stablecoins, interestingly enough, private issued dollar-backed stablecoins are a way to basically get dollars to places where there's a real critical legitimate need, where currently dollars just for whatever reason can't go due to the banking system rails in those countries. So there's this insatiable need for dollars.
Yeah.
Payment stablecoins allows that to happen and therefore helps secure the dollar's place as a reserve currency. The other thing that I was thinking about at Treasury were the larger geopolitical and national security implications of Web3 in particular, as that was emerging. Other countries, our strategic competitors, want to win in Web3. The currency of Web3 is digital assets, particularly digital dollars or digital fiat currencies. That's another reason why dollar-backed stablecoins are so critical to America's future.
It resonates obviously with me, and I sort of asked this question. Would the United States prefer to have the currency of the internet be the dollar or the euro or the yuan, the digital dollar, digital euro, digital yuan, and I think obviously we believe the digital dollar is critical for all of the reasons that you outline, and on top of that, obviously there's technical innovation that's happening here in sort of. The competition amongst currencies is a technological competition, and in some ways, right, the private sector and what's happening with blockchain technology is kind of creating a literal new form factor for currency and new superpowers, programmability, and all these other things that just are part of how do you upgrade the medium of exchange to be better. And so we need America to win in that and advance that and be a leader in that. And so you have it leads kind of into my next question, which is industry, technology and financial industry and sort of just industry broadly in the United States, free market-driven system. Industry drives ahead and is inventing and pushing and creating and innovating and obviously in the internet and technology space, that's been pretty profound. Like huge sweeping changes through major industries. And here we are now where the industry, the new financial technology driven industry is driving, and then you have an incumbent industry, which is in some ways defending its business. But then at the regulatory level, you've got, how do you balance the equities of we've got to keep this existing system safe and sound and so on, but also wanting to see that innovation flourish. And I think, crucially, in your last role as chairman of the CFTC, you had to deal with this intersection of industry and regulation. It's the heart of that job in some ways is reconciling what's happening with in that case many industries that care about commodities trading and so on. But I'd love to get your thoughts on that. How do industry and regulators work together? Because I'm we get things done when we work together mentality as opposed to us versus them or this kind of oppositional thinking. And so, how do you think about that, the oppositional thinking versus the how do we get things done together between industry and regulators?
Yeah, so I'd say, first of all, there has to be an open dialogue and a robust dialogue and a frank dialogue between regulators and the industry. Now, what should each side be focused on and do? Well, first, let me start with regulators, since I came from a regulator a while back. Regulators need to understand that they can't stop technology. This is going to happen. It's kind of like a river. You can help change and direct its course, but you can't stop it. So you can focus on directing it to make sure there's consumer protection, financial stability risk are addressed, and all sorts of other regulatory objectives, but it's critical that regulators are proactive and not reactive. Enforcement is no substitute for rulemaking in terms of providing guidance to the industry. And then I would also say that regulators need to understand that the real key is to make sure that similar risk are regulated similarly. So it's the question that you ask about traditional finance versus the new finance. If the risks are very similar, then you should try to ensure that they're dealt with similarly so you don't have regulatory arbitrage. But the real key, I think, is making sure that you're technologically neutral as a regulator and you have certain regulatory objectives, but otherwise you let the industry continue to innovate. So what should industry be doing? In some ways, for industry, the challenge is not figuring out what the law or regulations are today. It's figuring out what they're going to be 3 to 5 years from now and getting there first and shaping that. And one of the reasons that I was attracted to Circle is I feel like Circle has done that. As far as not all stablecoins are equal. Some are unstable and some are less stable than others. Circle has said, you have said, we want transparency, we want robust reserves, we want all of these features to be out there in the market that other market participants aren't necessarily getting behind, because ultimately it's going to lead to confidence and et cetera. And my view is it's going to lead to regulation in those areas as well. In other words, if industry steps forward, gets ahead of regulation and says, this is what sound regulation looks like. This is what the market needs to be. Not a race to the bottom, but a solid, sustainable market. I believe the regulators will come along with it.
It makes a lot of sense. I've been thinking about this a little bit, or a lot, just in terms of, the degree to which the technology innovators, as they build, are really taking into consideration risks more deeply, right? It's sort of a risk management mentality. Like, if that pervades the way you're innovating, even without someone officially saying you can or can't do this, or you have to do this way, which is sort of the perception of what regulation is. It's sort of very prescriptive. It doesn't have to be, but even just like taking that view, you build confidence in it, and you set a standard, and then actually the market establishes trust, and then that conveys into ultimately policy that reflects like the practices in some ways. And there's sort of this iterative, process to some of that. And in some ways, that's what's happening around the world, right?
Absolutely.
We've had 10 plus years of say the blockchain industry, like the first, I think, significant companies really starting 10 or 11 years ago, and wave after wave of talking about it, and various types of involvement. And now here we are 10 years into this, and globally, there's just an incredible amount of policy. And in some ways, that policy is a response to the very significant progress that industry has made in some ways, and a lot of disasters that the industry has produced as well, right? So there's both, hey, there's something durable, sustainable here that needs to fit into the system, and then there's something that is, there's challenges that have to get addressed and managed. But maybe if you're looking at this, again, taking a global lens now, not just a U.S. lens, what are you seeing from a policy perspective globally around digital currency and digital assets and this whole infrastructure category?
Yeah, so I'd say 5 years ago, the regulators sitting around the table in Basel were saying, what the hell is this? I think a couple more years later, probably into the crypto winter, they were saying, we're not sure if we like this or not. Now I feel like we've reached a point where regulators and policymakers are saying, look, this has a lot of promise, and some of it has a lot of peril. And there's good and there's bad. And let's actually now go ahead and start to regulate this sector. So you're seeing many countries around the world come up with regimes, particularly in the area of stablecoins, but other aspects of crypto as well. And also they're focusing on the real world utility. I think that's a key distinction that people are seeing today.
Yeah.
5 years ago, people were saying, look, this is really interesting stuff. The cryptology is fascinating.
Yeah.
It's neat, but it's kind of like a hobby horse. Does this stuff have any value whatsoever?
Right.
I think now you're starting to see real world utility in much of this, and that is what's driving regulators to say, okay, this is really important. It's going to happen. It has real world ramifications.
Yeah.
Let's regulate it.
Yeah, I mean, it's fascinating, right? There's this kind of triangulation of like the technical innovators over here, the questioning, how do we deal with this? And then the market adopting, major companies adopting, and sort of a validation of sorts that then, is like, wow, if big entities are going to move into this in a major way, we better regulate this, because if this is going to be used by major entities, major regulated entities, big technology companies, like this could get really big really fast. And so it sort of creates a little bit of pressure on people. I'm referring to 2024 as the year that, kind of digital asset regulation is truly, it's happening everywhere, right? It's sort of happening all over the world. But it's an interesting perspective. And I guess one, other topic, I think it's related to this is your views on, free market competition, market-driven outcomes, technology innovation, all of these forces, hallmarks of I think the American way of operating, and this, high risk financial sphere, and the tension and the intersection between that, and in a world where 114 governments are talking about CBDCs, where the government's going to get into R&D or in various types of ways, the role of the market, the role of private sector, the role of public sector, where are the swim lanes, and comes back to really one of the earliest questions, which is how does the United States win as well?
Look, at a high level, I would say the United States wins the way it's always won, which is by enabling sound regulation but really harnessing the power of the free enterprise system and the innovation that it brings. It's what led the United States to defeat the Soviet Union, and I think it's going to lead the United States to continue to be paramount in the world of this century. So then, as a regulator, how do you think about that? Well, my view has been, if you look at the securities markets, the derivatives markets where I was, the banking markets, all of those markets have sound regulation. But in order to succeed, it's not just relying on government regulation, but they figure out a way to parallel government attributes of regulation with market discipline and the power of the private sector and self-regulation in some cases. So I think in this arena, I think you want to be as technologically neutral as possible, provided the technology does meet the various attributes that are specified in the regulation. But ultimately, I think you want to unleash that innovation, and you want to have, if at all possible, the degree of transparency and other aspects that allow the market to discipline this section itself. So government plays a role, but it doesn't play the only role. If you rely on government alone, my view is that's dim hopes for a soundly regulated market.
Yeah. Well, it's fascinating to watch even in our industry where regulatory clarity, as people like to use the phrase, right? As you have that, then the market says, okay, we're here, we're ready to compete. And companies are saying, I'm going to enter this market, and there's going to be robust competition. And so it is, set the guardrails, let the market compete, iterate, right?
That's right.
Right. I think, exploring another dimension of this topic is kind of the appropriate places for regulation to kind of intersect with technology. And I think you've used the phrase like technology neutral, kind of same risks, same rules. These are principles that are often talked about. But in the case of blockchain technology, it feels to me like oftentimes, because blockchain technology has been so closely coupled with what is perceived to be financial activity, people speculating on digital tokens, the use of blockchain networks for financial types of activities. It seems to me that there's a real risk here, and this gets to I think the heart of some of the regulatory questions. There's a real risk here that because this technology layer is used for financial applications, that there's an impetus to want to specifically regulate the technology itself. And my explanation about blockchains is this is just network infrastructure. This is no different than the servers and the internet service providers and the routers and the infrastructure and the software operating systems and the data centers that we have that are the cloud, that are the things that sit behind our e-commerce applications, our medical applications, our education applications, our AI applications, all of these applications, including our online banking and payment systems that use internet technology. So we have financial applications that run on the internet, but regulators are not, saying, I'm going to regulate Comcast for money transmission or whatever the relevant analogy is. And so, how do you think about, from a legal perspective in some ways, this separation between internet infrastructure and the activities on it? And how do you think the policy world and the regulatory world should be thinking about that issue? Because I think it's going to be a pressing one as large-scale financial apps get deployed on this next generation of the internet. We have to figure out like where do those lines get drawn, and how does blockchain infrastructure, how can that flourish without getting an overly burdensome regulation on the tech itself?
Yeah, no, I mean, it's interesting, of course, and there aren't any easy answers, but I'll try to give you sort of my high-level views. You've got the internet and you've got traditional finance, and they're sort of merged in the blockchain. So the question is, where does the law of the internet end and the law of financial regulation begin? And it's all together there. I mean, what I would say is some of this is going to be, common sense. So I think about wallets, right? Electronic wallets. Now, this is my wallet, my old wallet. And no one would say the manufacturer of this leather wallet should be subject to financial regulation, even though the wallet is obviously critical to the way that I transact, and it's part of it's part of the financial services system in a larger sense, right? So I would think about it that way and say, well, if you're just providing technology to create a wallet, then you are not providing a regulated financial service.
Right.
If your wallet you actually control and you have the public key or the private key associated with it, then you're arguably not in the wallet manufacturing business, you're in the custody business. That's a traditional financial activity, right? So I think we're going to have to use a lot of common sense and sort of take the lessons of the past and try to apply them in this new world of blockchain without taking things too far in one direction or the other. And not going sort of saying, well, it's free speech, and then on the other extreme, not saying anything that touches the blockchain and the blockchain itself must be a financial activity.
That makes a lot of sense to me, common sense. I think the world is changing so fast, and I think the evolution of a lot of internet infrastructure itself came out of a kind of a very classical libertarian view of speech, of kind of the decentralized nature of infrastructure, and there are really powerful aspects of that, what I kind of think of as the DNA of the internet, that distributed, decentralized, open source, open intellectual property kind of world is very, very powerful. And actually, I would argue, creates more resilient infrastructure than if you hired an army of people to go try and build something that's closed. And
we have real world examples of that, right?
Yeah.
Look at certain countries that are our strategic competitors that have closed systems and that have trying to create their own central bank digital currencies, complete with surveillance tools and everything else. There is a very big threat of an undemocratic Web3 that I think everyone needs to be aware of.
Yeah, absolutely. As I like to say, cryptography cuts both ways, right?
Right.
It can be a tool of freedom and privacy, and it can be a tool of surveillance. And so the crypto of it all, it unlocks a lot. It unlocks security, privacy. It unlocks, it allows you to have proofs of who you are, or proofs of other things. It's an incredible technology, and it can be applied for good and evil. It can be applied in a lot of different ways as well. It's maybe a segue into the kind of the last big theme I want to chat about, which is, of course, the future. You've recently joined me as part of the leadership team at Circle, and you've had this incredible career in many facets over, I guess, the last 20 plus years. I don't know what it is. Don't want to date you, but over a long period of time. Interacting with and intersecting with the traditional financial system, the role of governments. What do you envision? What do you think is possible in the next 5 to 10 years? How can the world be better? What can we accomplish if we get things right on all these different dimensions?
So one of the things I love about this podcast is it's called The Money Movement, and it's really a double meaning.
Yes.
Right? There's the actual movement of money, and then there is the political sort of economic philosophical movement about the future of money.
Exactly.
In both of those things, I think you're going to see potentially dramatic changes. So on the first, you're going to see a lot more proliferation of digital currencies, particularly, I think, starting with stablecoins first, fiat-backed stablecoins. The utility case is very much there. And then, of course, with the permeation of those instruments, you're going to see more smart contracts. You're going to see more run-of-the-mill, plain vanilla type of transactions, I think, going to the public blockchains.
Yes.
And using things like USDC and other payment stablecoins as sort of the basis of that.
Yes.
I think you may also see additional types of digital assets that are not stable coins, but it could become an alternative asset class. I think people are still, in the wake of the crypto winter, still thinking about, well, what's its correlation? But it could very well be that there's continued investment in that area.
Yeah.
And then I also think with AI, we haven't talked about that. That's probably its own podcast.
Yeah.
But in some ways, digital dollars and other digital assets are sort of the native currency to AI.
Of course.
So I would put a pin in that for now.
Yes. I got to do an episode on that.
You got to do an episode on that.
Episode on that.
And then moving to the other connotation of movement, I think we're going to have a robust public debate on the future of money, and particularly, I think, starting with things like CBDCs. I think Americans are wary and should be wary of a government-controlled currency that enables surveillance at levels, heretofore never seen. And the privacy, the civil liberty concerns on both the right and the left of what that means. Now, there's probably there may be a way to find a happy medium there where maybe you have a wholesale CBDC, but I think we're going to have this debate not only in the United States. You're seeing candidates now, presidential candidates talking about these aspects of it, but you're also seeing other Western democracies debate it as well, as you see countries like China and Russia develop there. So I feel like there's going to be a great discussion, a robust discussion. Also the future of the dollar, sort of what's the role of the central bank. So I feel like we're going to have a dialogue about the future of money that we haven't had in the last 60 years.
Yeah. I think so too. I mean, as you know from other conversations we've had, I think there's also like a deeper set of philosophical questions about what is the right structure for how risk is taken in the financial system, right? The role of the payment system and the base money versus lending, and where does credit happen? The leverage in the system. These have been these things that have been part of boom and bust cycles and financial crises, and there has not been, in my view, a robust debate about full reserve money. If you have an internet financial system and you have full reserve money and you have super high velocity money that's programmable, could you actually envision and create a new credit delivery system that meets the goal of stimulating the economy, transforming the time value of money, which was the sort of base there, but make it safer, right? So that's a big discussion. No one wants to talk about it because I don't think they realize how significant of an issue this is. But it's one that we think about, obviously.
No, it absolutely is. And banks obviously play a special role and always have in our economy. That's why they're regulated as such, but there is a government safety net there.
Yes.
And because there's an inherent risk there, a maturity mismatch,
right.
that gives rise to both discount window access as well as deposit insurance. But interestingly enough, even before we get to the internet and Web3 and sort of that, over the last 10 to 15 years, you've seen a migration of credit intermediation go from the bank sector to the non-bank sector. Private credit markets, right? So in some ways, we're already heading in that direction, and in many ways, this could be the next chapter of that.
Yeah. I have another episode where I talk about long-tail capital markets, and just like we have an infinite marketplace of goods and services through Amazon or Alibaba, and we have an infinite marketplace of content and information through Google and information services. Might we have an infinite marketplace of capital that can find and match the people who need it from the people who have it in as efficient and automated a way as we have these giant marketplaces and other things? And that's very different than the capital markets that we have today.
Without having large systemically financial institutions sitting in the middle of it that are potentially susceptible to financial instability risk.
That's exactly right. Well, much to work on, and really great conversation. Super happy to have you on the Money Movement. Super happy to be working together. And thank you, Heath.
Thrilled to be here, Jeremy. Thank you so much.